The NAIC has established 11 optional provisions that can be added to a health insurance policy. These provisions protect the insurer. Change of occupation. The change of occupation provision covers two situations. First, when an insured changes to an occupation that is more hazardous, the insurer's risk increases. This provision lets the insurer reduce benefits. Second, if the insured changes to a less hazardous occupation, this provision requires the insurer to reduce the premium. Misstatement of age or sex. The misstatement of age or sex provision applies when an insured misstates his or her age or sex on the insurance application. Any benefits will be paid according to those the premium would have bought at the insured's actual age and for the insured's actual sex. In some states, the misstatement of age or sex provision is not an optional provision, but a mandatory one. Other insurance and this insurer. Most health insurance policies coordinate coverage to limit total coverage to no more than the loss. This prevents overinsurance. Example: overinsurance is having insurance coverage that it is more than the cost of the risk insured. This increases the chance that the insured may try to profit from insurance. A person who earns $1,000 each week and who has disability income insurance that pays $1,500 each week is overinsured. The purpose of health insurance is to indemnify the insured, to put the insured back in the position he or she was in before the loss, no better and no worse for it. The other insurance in this insurer provision applies when an insured has two or more related policies with a single insurer. The total coverage that the insurer underwrites for one person can be limited to a certain amount. Then the number of policies the insurer issued for this person does not matter because any excess insurance is void. Any premiums charged for coverage over this limit are returned to the policy owner. Insurance with other insurer. The insurance with other insurer provision addresses a situation in which an insured has coverage for the same risk and expenses with another insurer and has not notified this insurer of the other existing coverage. This provision lets an insurer prorate the amount of benefit it pays for an expense-covered loss if another insurer covers losses from the same event. It keeps the insured from receiving a benefit that is more than the loss. Example: Company A provides $2,000 in benefits for a loss. Company B provides $3,000 in benefits for the same loss. Company A's liability for the loss will not be more than the proportion of total benefits it assumes. Company A benefits, $2,000, plus Company B benefits, $3,000, equals total benefits, $5,000. Company A benefits, $2,000, divided by total benefits, $5,000, equals 40%, Company A's liability for loss. Any premiums paid for coverage that are more than are needed to cover what Company A pays are returned to the insured. Other insurance with other insurers. The other insurance with other insurers provision applies to coverage with multiple insurers when the primary insurer knows of them. Often the insured is covered by a state's workers' compensation program. This provision prorates each insurer's share of the total benefit due. This provision covers losses on other than an expense incurred basis. Under this provision, the insurer must return premiums that are more than the amount associated with its proportion of prorated benefits. Relation of earnings to insurance. The relation of earnings to insurance provision applies to disability income insurance policies. It avoids overinsurance by reducing the policy's benefit amount if the disabled insured receives more income from the insurance benefit than from working. This can happen when an insured accepts a lower-paying job after the policy has been issued. It can also arise when the insured has additional sources of disability income insurance. In either case, policy benefits will be reduced proportionally. Any premiums paid for excess coverage are returned to the insured. Unpaid premium. The unpaid premium provision addresses any premiums the insured owes before the claim. The insurer can deduct the amount of unpaid premium from the benefit paid to the insured. Cancellation. The cancellation provision lets an insurer cancel the policy at any time with 45 days notice. The 45-day notice is also necessary if the insurer is not going to renew the policy or changes the premium. If the insurer is canceling the policy because the insured did not pay the premium, the insurer must give 10 days notice to the insured. The insurer must still pay a valid claim that the insured submitted before the policy was canceled. If the insured paid a premium that was not due, the insurer must return it. Conformity with state statutes. A conformity with state statutes provision reconciles any provisions in the policy that do not comply with the laws of the state where the insured lives and the policy is issued. Non-compliant provisions are automatically changed to meet the state's minimum requirements. Illegal occupation. The illegal occupation provision lets the insurer deny a claim that arises from the insured's participation in an illegal activity. Intoxicants and narcotics. The intoxicants and narcotics provision lets the insurer deny a claim that arises from the insured's intoxication or illegal use of narcotic drugs. It does not exclude a claim that arises from the insured's use of a prescribed narcotic. The following table summarizes the 11 optional provisions and the purpose of each. Please pause the audio and review the table. For your review, the 11 optional provisions protect the insurer. Insurers can use all, some, or none of the optional provisions that the NAIC established. Most types of health insurance coordinate coverage to limit total coverage to no more than the loss. This prevents overinsurance. Overinsurance increases the risk that the insured will profit from having health insurance. The purpose of health insurance is to indemnify the insured for a loss. An insurer can cancel a policy at any time, refuse to renew a policy, or change the premium, with at least 45 days notice. The insured can cancel a policy because the insured failed to pay the premium. The insurer must give at least 10 days notice. Please pause the audio and watch the video. You can restart the audio playback at any time.
I see Uniform Accident and Sickness Policy Provisions Law identifies 11 provisions that are considered optional. That is, they may or may not be included at the option of the insurance company. Though they are optional, it's important to understand that they do have to meet minimum standards if included in the policy. So let me repeat. These provisions do not need to be included in a health insurance policy, but if the insurance company chooses to include it, the provision must conform with the minimum standards as defined by the NAIC model regulation. Let's take a moment to talk about one set of optional provisions which seem to give students a little bit of trouble because of their apparent similarity to each other. And they are what I call the 3 other insurance provisions. And they are specifically the other insurance in this insurer provision, other insurance with other insurer, singular, provision, and the other insurance with other insurers, plural, provision. Let's see if we can differentiate between the 3 of them. First of all, the other insurance in this insurer provision, that's a pretty straightforward provision. That simply says, if you, the policy owner, have more than one policy of this type with our company, then we are going to basically coordinate payments from those 2 policies so that you do not basically get overinsurance. We will reduce coverage on one or the other of the policies with our company so that the total amount paid out does not exceed a maximum benefit amount. That's pretty easy to understand. We don't want to prevent, the insurance company does not want to provide overinsurance for a loss. That same theory applies in the other 2 provisions, but in those cases, they relate to coverages that are in addition to the current policy outside of the insurance company. In the second instance, or the second case, the other insurance with other insurer provision, that simply says if you have a policy similar to this one with another insurance company that we're not aware of, and we find out about it, we are going to adjust our benefits so that between our benefits and the benefits provided by that other policy with the other insurer, you will not be overinsured in the benefits that are provided. Again, fairly easy to understand. So what does that third one mean? Other insurance with other insurers. Well, in that case, what the provision is saying is, if you qualify for benefits from a social insurance program like Social Security Disability or workers' compensation, and you qualify for benefits in this policy, here too, we are going to adjust benefits so that between the two of them, you are not overinsured. So I know the distinction is subtle, but it can also be a little bit confusing. So take a little extra time when you're reviewing this lesson and make sure you can distinguish between other insurance and this insurer, other insurance with other insurer, and other insurance with other insurers.
Okay, here's the questions. An insurance company is canceling a health insurance policy because the insured didn't pay the premium. How many days notice are you supposed to give the insured? I want to say 45. That might be too much. Might be 10. All right, the intoxicants and narcotics provision let an insured deny a claim if a loss results from intoxication or use of non-prescribed. The insured is arrested while driving under the influence of alcohol. A third party, a loss results from negligence. Okay, I'm going to say the influence of alcohol. All right, a function of the other insurance with a provision and other insurance with a provision is a function of the other insurance with an insurance provision and the insurance provision is a function of the other insurance with this insurance provision and the other insurance with the other insurance provision is, oh my God, talk about confusing wording. Oh my God. I have no clue. Maybe coordinate benefits. That wording is horrible. I hope we don't have any questions like that on the test. Which optional provision addresses premiums that the insured owes at the time of claim? Unpaid premiums, maybe. All right, let's see how we did, or I did. I got half right. Oh, I said 10, didn't I? I was thinking 10. I was going back and forth. Okay. So you got 10 days. You got to give them 10 days before notice. That's a tough one. All right, so this one is a loss results from intoxication or use of non-prescribed narcotics. So either or. That's the correct answer on this. That's when you are denied a claim. Coordinate benefits is the correct answer on 3 with that crazy wording. I'm not even going to repeat the wording. Health insurance policies are intended to return the insured to the position he or she was before a loss. All right, 4. I got that one right too. Unpaid premium. Which optional provision addresses premiums that the insured owes at the time of claim? All unpaid premiums need to be addressed. Okay. So that's it on this lesson. I'll see you all on the next one.